Geoff, the federal budget has been handed down. What are the takeaways?
David, there was a raft of programs in the budget, but I'm going to focus on four of the key ones today. One is the extension of the instant asset write-off program. The second is the loss carryback provisions. The third is the job maker incentives. And the fourth is the boosting apprenticeship commencements, which is a direct government subsidy for putting new apprentices and trainees in the workplace. The instant asset write-off program has been raised with government by the VACC and through our national body, the MTAA, and the Australian Chamber of Commerce and Industry. We highlighted to government where industry needed this to be extended past December this year, and especially in vehicle sales and machinery sales. We alerted government to supply chain issues with vehicles and the fact that in COVID-19 in Victoria, it had meant that many businesses wouldn't be able to buy vehicles and machinery before the scheme ran out in December. This new extension to the instant asset write-off program is a big win for VACC members, and you should be talking to your accountant right now about where your business can apply for this. The government has clearly aligned this incentive to stimulating the business economy and gearing business up to meet the expected bottled up demand as we come through COVID-19, as those restrictions come off. Productivity and efficiency are key drivers in this program. The loss carryback provisions is a new tax incentive for companies with a turnover of less than $5 billion. This allows businesses to generate a tax refund by offsetting tax losses against previous profits on which tax has been paid. Losses incurred in 2019-20, 2020-21 or 21-22 can be carried back against profits made in or after 2018-19. Ask your accountant to check your eligibility and have a look at the tax incentive fact sheet link below for more information on this program. On the instant asset write-off program and on the other programs, we'll be holding a Zoom seminar, hopefully over the next 10 days, and look out for the flyers on that because they fill quickly and they're capped to 100 members on each of those. Jobs and employment were also a major cornerstone in the budget, and the government forecast employment and apprenticeship incentive programs, and we fully support them. Job maker hiring credits are employer incentives targeted at creating jobs for young job seekers. Employers can access a support grant for newly created jobs for people aged between 16 to 35. The incentive goes for 12 months, right up to the 6th of October next year. Additional employees in your business aged between 16 and 29 will attract an incentive of $200 a week for employers and $100 a week for eligible employees, and that incentive goes back to the employer. That's where they're aged between 30 and 35. So there's two levels based on the age of the person. Again, look at the eligibility in the fact sheets below, but there's some great opportunities there to put people on and to get incentivised for doing that. The Boosting Apprenticeship Commencement Program is about trying to fill the gap nationally of over 100,000 apprentice shortfalls that we have, and ensuring that we've got the required skills and labour as we move out of COVID-19. This is particularly crucial for the automotive industry, given our industry alone nationally has a shortfall of 30,000 jobs that aren't filled. We're going to have a slowdown of international labour coming through, and that's going to compound that challenge for us. In reality, we have to get used to finding and training our own skilled workforce of the future. We still have the situation in automotive where 60% of automotive businesses don't hire an automotive apprentice. The other 40% do, and they do the heavy lifting. It's not sustainable. It's not a government problem, it's an industry problem, and it's very short-sighted. This new program gives us an opportunity to try and bolster the numbers we need for the next decade and encourage more employers to give an apprentice a go. On the current trend, the shortage of skilled automotive technicians in Australia will only widen if we don't do something about it and we don't have a bulk of new apprentices coming through. This incentive subsidises the employer where they put on a new eligible apprentice between the 5th of October and the 30th of September next year, and it pays for 50% of the wages. There's some caps in there, but 50% of the wages for the first 12 months get paid. There are caps on the total amount of places available, and it's 100,000. So I'd urge you to get thinking about when you're going to put an apprentice on, because it includes trainees as well. They'll soak the numbers up. You can still access an apprentice through a group training scheme, and where that apprentice still meets the criteria for employment, the group training scheme will pass on those incentives back through to the host employer. Again, there's a link at the bottom of this film, and that gives you more information on how that program is going to work. So these are just an overview of some of the industry and training programs that have come through the budget. And again, keep an eye out for notices on some of the Zoom seminars that are coming through, and I'll go deeper into some of the programs over the next couple of weeks.